Get away from me. What are you doing? Don't burst my bubble.
No, today we're going to talk about inflation.
Oh, for God's sake.
Good morning. Welcome to the Hair Curler Chronicles. Got Tim and Nancy Danter coming to you from the bathroom in Kitchener-Waterloo. So today, I want to talk about inflation. And because everybody's talking about inflation right now, it's something that's in the top of minds of investors all over the place. And I think
they should understand that we're not full of hot air.
That's a bad dad joke, you know. That's a bad dad joke. So I wanted to talk to you about Anthony Pompliano. We subscribe to his investors newsletter, and so he wrote something that I think really resonated with me, and that's why I wanted to talk about inflation today. So some people are worried about inflation, and some people are not worried about inflation. It feels like this debate is the most important conversation in finance right now. There is an interesting angle to the debate that everyone forgets, though. Whether high inflation ever comes or not doesn't actually matter. The fear of inflation is ultimately what drives capital flow. When investors are nervous or uncertain about inflation, they will begin to acquire stores of value and inflation hedge assets. In the past, these assets have included real estate, precious metal, and various alternative assets like expensive art, and now Bitcoin. So what we are seeing play out in the market is the fear of inflation today. On one hand, investors see trillions of dollars in quantitative easing and zero rate environment. On the other hand, you hear Chairman Powell explicitly stating that the Federal Reserve won't act on rising inflation until it is consistently running higher than their historic targets. So at some point, investors begin to believe what they are seeing and hearing. They believe that you can't print trillions of dollars and not see higher levels of inflation. They believe the Fed is actually going to do whatever it takes to drive inflation higher. They believe that asset prices increase that we've seen over the past 12 months are a direct response to inflation. So I'm going to skip past a bunch of this to where he ends this off because this is really, really important. So what we're watching play out, investors are fearful of inflation. They aren't going to wait for inflation to occur before they act. They'll front run the inflation. They will move capital into inflation hedge assets, and those inflation hedge assets will continue to rise. As we blum inflation, it rises. So even though the 10-year rate is moving up, the fears of inflation are swirling. The Federal Reserve is committed to seeing these higher rates. Hopefully they'll be able to control the inflation once it gets above 2 to 3%. Nobody knows what's going to happen, but the key to all of this is the psychology is more important than facts at the moment. And that's just it, right? And so when you're looking at your investment portfolio and you're looking at stocks are not an inflation hedge asset in any way, shape, or form. Maybe I shouldn't say that completely, but inflation hedge assets are things like well, you're looking at me. I feel like you're
waiting in bated breath.
I feel like you're going to disagree with me. But
what if I do?
Well, you can.
Okay, thank you. Give me the balloon.
No, because I want to say.
I wanted to squeak one out.
I know you did. So maybe we'll go back to this and we won't make such definitive statements. So when we're faced with inflation, what does that mean? Do you know what inflation means?
Well, you've just demonstrated it.
Well, inflation.
People are full of hot air.
No, inflation means that the assets, the value of the assets are getting bigger and bigger and bigger.
So the assets are inflated with hot air.
They're getting bigger and bigger and bigger. It gets inflated, right?
Right.
So one of the things that happens is asset prices go through the roof.
Creates demand. Creates FOMO.
Well, not necessarily. But it's where so real estate is a good example of this. So last year when we bought that investment property, the cottage that we rent out, if we were to go sell it this year, it's worth a boatload more money because inflation has taken over. Well, there's a housing boom, but part of that is this inflation, right?
Inflation related.
And but it means that purchasing power goes down. So when food prices get inflated, that means your grocery bill, where you might have been spending $100 before for a bag of groceries, one bag of groceries is going to cost you $125. You're going to be able to buy less. Your money is going to be worth less. So in order to protect yourself, you need to put your money and your savings into an inflation hedge asset. You're betting that your investment over here is going to be worth more than the cash you've got sitting in the bank. Does that make sense?
Mm-hmm.
Deflation,
I wanted to do that.
I know you did, is when the air comes out and the assets aren't worth as much. But it looks like we are facing down inflation right now. And that's coming from all that quantitative easing that they're pumping liquidity into the market. And they had to on some levels. The first time round, I'm not sure about the second time around. Anyways, we're just in
and who knows if there'll be a third time around? I mean,
well, we don't know. We don't
know. Because we're just the normies. And but it's the 1% that controls all that.
Right. So when you're looking at your investment portfolio, you got to be thinking about the psychology, whether you believe we're going into inflationary times or you believe that we're not going into hyperinflation. It's what does the general population believe? What's being talked about in the markets? Because all of this is just a belief system. And once the vast majority of people believe something, then it becomes a self-fulfilling prophecy, as Anthony Pompliano had stated. So if you're paying attention and you're not just looking at your own personal situation, and you're not looking at your provincial or your state situation, and you're not looking at just your country situation, but you pick your head up and look at what's happening around you from the world point of view, you will see that chances are we're going into hyperinflation. We're going into inflation, period. Whether it's hyper or not, I guess, remains to be seen. So just pick your assets wisely, and pick your investments wisely. I don't think leaving our money in cash is the right thing to do, because the cash is devaluating as we speak.
So we have to rethink that, because initially that's what we thought we should do, was to take the...
I know. Well, that's for another video. But anyways, so remember, inflation when things get inflated, deflation when it comes down. This is the law of the red balloon. Have a great day.
That was really interesting, Nance. That was something that we start to hear the buzz. We start to hear the buzz on social media. We start to hear the buzz all around about, at some point the tap gets turned off with the quantitative easing. And then what? Are we recovered from the pandemic? Is there herd inoculation or the herd mentality of being, either, you know what I mean? And it's scary. I mean, that is when deflation comes in. That's when inflation comes in. I don't know. But that was a great video. That was good for you, honey. Good for you. Can I play with the balloon next time?